Moses, in fewest words possible.
Yeah.
I'm that client who's I've come to you with that 100 million.
Yeah.
I'm 55 years old. I've just received my retirement benefit.
Yeah.
And I'm telling you that I want that money in high risk product like equity fund, special fund. What's your advice?
No, thank you. So for such a client, first of all, is to understand, apart from this 100 million, this someone who has retired is looking out for capital, or what you may say payouts, and what do you call this, stability in those payouts are very key for such a person. So when we are sitting down and analyzing, yes, he wants to double the money, there will be some payouts along the way. The risk factor comes into place because also of the age. If at 55, if we lose this 100 million, recovering this money or making another 500 million again, it's impossible. You're looking of, even if he was go to look for a job, he's no longer marketable as he was and all that. So this client, first of all, is to make the client understand. Yes, you can double the money. On the same time, you can still lose the money. And as we are working on this investment, when you talk of the investment, there are three factors. One, you need to think of time. The other thing you need to think of risk, and then you need to think of return, not return alone. So as we are looking on doubling this money, we look on maybe almost 60% of this portfolio will need to be in a very safe asset classes. One that preserves the capital, and then maybe this other 40 or 30 to 40, we look for growth. So even as we are allocating, there's something we call investment policy statement. For such a client with 100 million, we put them in a, what you call a segregated mandate, where we can even have a custody for you, and then you appoint Nabo as your fund manager to invest this money for you. And then during the agreement, when you're signing the agreement with Nabo, we agree on the remits. How much can we invest in government bonds? How much can we invest in special funds? How much can we invest in equities? How much can we invest in, there are those who say, I want ETFs. How much can this accommodate? So we agree on this. So as Charles and the team are investing and every day checking the market, they know this opportunity meets this client A. This guy is suitable for this kind A. So suitability is very key. So when we have that IPS, it will guide on that journey. And this client will come and sometimes say, I think my money is not growing the way it is. But you remind them, the journey we took, it is informed by these factors. Maybe they are comparing. Maybe it's the old mzee has met with the son, and the son has told him, I am doing that 2% in this asset class. Then he comes and say, can I put all my money there? You tell him, slow down, understand why we are doing this. We are also looking for, longevity for this journey. It's not a one event. Investment is not an event that we are doing today. It's a whole process. So we are looking on the long term. We are not here to speculate. This is the money that we need to preserve a lot. We need to preserve this. And the goal is we grow this money, takes care of you, and possible this money can become a legacy portfolio that can take care of your beneficiaries or the next generation. So managed by a fund manager, and that point we even educate this client the need of a family trust. Having a legal structure around your investment and highlighting all your beneficiaries such that this wealth managed well can serve even the next 4 generations. So that client understanding, making the client understand, and working with a professional, investment professional. We are not just there to make our fee, our management fee, and then the satisfaction comes from the point that we walked with you the journey. We've seen your transformation, because this client also at 60, 50, 60 and there, medical checkups, those, he need money to make sure that he has a good life as he was working. So the kind of the lifestyle he had when he was working, that lifestyle should continue. And this is the only portfolio they have. So that kind, you can tell them, slow down. This is how you're going to walk this journey.
Thank you, Moses. You've mentioned something there in acronym, IPS. Just for our viewers, IPS means Investment Policy Statement. It's basically a guideline that will guide us how to invest on our behalf, and basically it's like our Google map when it comes to investment space. Just to mention some products, let's quickly just, and also we're running out of time. We can also be precise and short with the response.
Yeah.
Yes, so you've mentioned some products which are quite interesting.
Yeah.
According to the Capital Markets Authority, if you check the website, there are a number of products that have been shortlisted there that are public.
Yeah.
We have the CIS, which are collective investment schemes, the money markets, the fixed incomes, the equity funds, and the special funds. We have the IREITs, which are the newest in the space, some being also floated on the counters through Nairobi Securities Exchange.
Yes.
Could you just briefly speak about IREITs?
Yeah.
And the traditional mutual funds, the money market and fixed income, and what is the outlook in terms of these products?
Oh, okay.
Yeah.
Okay. Yeah. So there are a number of products that have been that are available in the capital market space, from the public to the private. So if I to touch on the public funds that are available, the most prevalent and the biggest in our industry is the money market funds. So these are short-term funds that you and I can invest, and we can invest typically for a period of less than 1 year. So anyone looking to get a higher return, say, than a bank deposit, and they're looking to also maintain liquidity where they can take money in and out quite easily, then that money market fund fits them quite well. The fixed income fund now is slightly longer in regard to the tenor. So that one is for someone looking to invest more than 1 year. They typically invest in government bonds and corporate bonds, and they give the benefit of that compared to a money market is that you get a better return because it's now able to invest in longer securities. A money market will be limited to about 12 months. So T-bills, bank deposits, commercial paper. Then the next one is special funds. Special funds are quite varied in what they can invest in, from offshore to equities only to fixed income to corporate. So they're quite varied. So it's for each individual or in each investor to look up and say and understand what particular, if you're told, okay, invest in this special fund because it's giving you, say, 20%, understand what the underlying assets and how they relate. I think even Moses touched on that. Always understand those underlying assets. And so now when mentioning those three key products or those three key funds as well as equity funds where they invest only in equities or shares. So you're able, instead of buying individually, you're able to be consolidated in an umbrella with other investors and able to enjoy the market return. And the good thing about, let's say, an equity fund compared to investing for your own is that now you have expertise. The fund manager is the expert who understands the markets, who looks at it daily, who engages the counterparties, and is able to select the best stocks that they anticipate will do well. And lastly, it's just touching on maybe two other products, is the IREIT. So IREITs have been there for quite a while. We've seen the emergence of other successful ones, like the ACON, for example, is a good one, which builds the students' residences. Like they've done it for a while. But also what we're seeing now is emergence of let's say, USD IREIT. For example, the Trific, which is a monumental one in terms of being one of the pioneers in terms of dollar IREITs. And you're getting income. For example, this particular one, you're getting direct dollar income and good yields that are competitive. And instead of owning land directly, which can be earning zero, or this one you're owning a piece of a property that is giving you income. And lastly is private debt. Private debt is becoming an emergent space, quite big. And that means you're investing in, you're giving a company your money at a certain rate. And there's such a gap because debt there's a gap because the banks can only give so much debt, and getting debt from a bank is quite difficult. You need collateral. It's a long period of time, but also they can get now directly from the market. So those are some of the products that are available to our investors.
Okay, thank you, Charles. Yes, as Charles has mentioned, we do have a terrific high rate that we're floating at 8% net of everything, and shall be available to the public soonest. Just on the same Moses, just on the same products in 1 minute.
Thank you.
As a business person, should I put my money in current account or should I invest in money market?
Yeah, these are a discussion we always have with the clients, and whereby we encourage a lot in terms of part of the money you have is the reserves that you're putting aside, but this money maybe is just seated idle in that account, earning zero interest. There also an impact of inflation on that money. So you encourage this client, you can use money market fund like your current account. You can be putting money, like even some people are doing some projects, and maybe as a contractor is getting some funds, maybe have been paid up front, but he'll be doing a drawdown towards the project they are doing. So they put it in a money market fund, and then they access this money. This money is available to you for within 24 to 48 hours. In case you request today, within 24 to 48 hours, you are able to do so. Their clients have done that with them. And by the end of the year, when you analyze the returns, you realize they have made something extra. Or not just only meeting their project's needs, but on top of that, they have made something extra. And that's what we are saying. That's having your money also working for you. As you complete the projects, you're getting the profit on the other side. On this side, your money is not idle. It's generating some returns, which is also helping you to beat the inflation. So people in the businesses, I encourage a lot that money, maybe you're waiting to do a project in the next 3 months or 4 months or even 2 months. Let that money not sit idle in the bank. Let's have that money seated in a money market fund where you earn a return on that. And also depending on the horizon, if you're looking on a way, like having a fund that can help you cater needs for them, like at Nabo, what you have done, having a fund that is able even to pay our salaries from the returns we are making. That's something we propose to businesses. Sometimes the economic or the business environment may be harsh, and you are not able to make as much as profit you are thinking to meet your daily needs, but the reserves you are having, putting them aside and growing that fund, it comes through for you when maybe that time, maybe meeting your obligations like salaries and all that, just from the return. And that should be the goal for every business, building another stream of income in terms of this passive income, the return that is able to help you meet the daily operations.
Okay, thank you, Moses. As we wind up, closing question, actually a minute each. In one sentence, what's your prediction for 2026? And for someone who wants to be smart with their money, where should they put their money?
I think 2026 is going to be a growth year. We've seen consolidation, so we've seen tough markets post-COVID. We've seen recovery. We've seen some consolidation, markets coming together. I think in 2026 it's growth. Growth. I think that's my key takeaway for our investors, or people watching, people listening, that this year is the year of growth. There's a lot of liquidity, there's a lot of money chasing investments, and I think that will push the market towards more growth. And so when it comes to looking at your allocation, it's basically understanding that if interest rates are coming down, which we expect, we do see opportunities. We see opportunities in the equities market. We see also opportunities in the bonds market, because as rates come down, the value of the bonds go up. And we also see a lot of opportunities in the alternative space, for example, the high rate and even offshore. So we're seeing opportunities offshore as well, dollar investments. So that's our key takeaway. That's how I view it, that growth will drive 2026.
Okay. Growth. Moses, are we seeing money flowing to the market?
Yeah.
Okay.
From 2020, if we look on the 2025, 2026, even from the clients I handle the portfolio sizes, the portfolio has been increasing. So that one tells you the confidence. The people have a lot of confidence in our financial markets. And also like we had a rating of upgrade by the Moody's on the Kenyan credit. That gives you the what you may call in terms of the macros bit of a stability. So we are seeing investors coming, even foreigners, they're still coming, and I think this is a good opportunity, for continue investing, building the opportunity. Money is flowing in, but also at the same time invest with purpose. Be guided by the goal. Don't just follow the returns. Don't just place money there and forget about it. Just say I put money aside. No, walk the journey by having a financial advisor. And if you have already one, just ask this conversation, have this conversation going forward. And even pay us a visit at Nabo Capital. We have a team that will listen to you and able to advise well. But don't walk alone in 2026 as we are looking for this growth, how to unlock some of this. Don't walk alone, walk with a financial advisor and with a good institutions. Check on the reputations and all that. But the more so the thing is, take time also to learn. Take time to listen, like the conversation we are having here, that is shaping the decision you're going to make next. Have those conversations even with your loved ones, even your kids, as you continue investing. I've seen clients now opening minor account, starting a small investment for the kids, building for the next generation. You're putting this, it's not just putting money aside for them, but also preparing for them by equipping them what is an investment. So that journey, don't walk alone. Even with your family, have a financial advisor. The way you have a family doctor. Thank you.
Thank you, Moses. One thing I've gotten from there is don't chase return, chase the goal. Then the goal will define the return. If it's high growth, then return will be higher, risk will also be higher. If it's educational, risk will be low, return also might be lower, probably market return. That was the roundtable with Nabo Capital, speaking about the smart money. I was your host, Fred Komodo Kudo, an associate manager at Nabo Capital. Thank you.